My son tried very hard. He tried 7 times to pass a top step combine. The reason why he was blowing it, trying to do the 150,000, because he was trying to trade with the maximum amount of contracts. Just because they're offering it to you doesn't mean you should do it. And he wasn't trying to adhere to any of the things I outlined for him, which is very frustrating. But yeah, I guess you're gonna do these things, especially as young men. You're gonna rush into it, and he wants to be able to show me that I can do it, Dad. Watch, I'll do it my way, and his way didn't work. So we sat down over the weekend, and I told him, I said, listen, are you ready to really sit down and do this the right way? It's going to be boring, and you want it to be boring. His number one concern is he's afraid now to push the button to get in. And I said, well, you're in good company, because that's exactly how it was for me. I was very, very scared to get into it in the beginning. In 1992, I had no idea what the hell I was doing, but I was really inspired to learn. So when I sat down with him today and told him, I said, listen, we're going to think about how a $50,000 account. I know you said you were going for that $150,000 account. Okay. And you were trying to prove to Dad you were going to go on the internet and piss all over my trolls and like you have to defend me, which you don't. I want you to think about a $50,000 account. And I want you to think about 1.5% risk of that. That's the highest you can ever go. You can never go above 1.5%. Now, if you go out and look at these funded accounts, they allow you more than that. Not by much. I think it's like 2%. But I told him, you are not allowed to go over 1.5%. Because if you go over 1.5%, you failed. In my eyes, I'm your dad. I'm telling you, you fucking failed. Not just, I messed up. You fucking failed. You took that on. You did it yourself. You chose to fail. It didn't happen to you. You chose it. So I sat with him today and I said, look, I want you to think about what 1% looks like on a $50,000 account. That's still more than you make all week long. What happens if you sit down and you make that in one day? How would that make you feel? Just one day? Yeah, one day. That's what I said. One day. What does that make you feel like? He's, oh, I would want more than that. I said, why? You're not making that right now. Because clearly, where you're working, that isn't going to cut it. I don't think it's appropriate for you to have that type of mindset where what you're doing is it's normal for a teenager. While you're in school, he was homeschooled. You go to a coffee shop and you're working there, you're making $400 a week. Wonderful. $400 a week for, a 17-year-old, it's spending money. You work all week long around these insufferable people that come to the location where he works at. And where I live at, there's this snootiness, okay? That everybody thinks they're better than everybody up here. Okay. And it's, believe me, it's ridiculous. Like it's nonsensical the way they all act up here. And if you go into a place of service and a person's waiting on you, if you're going in there too and you're patronizing a place like, where my son works at, he works at a coffee shop. It's a Starbucks. And it's just unbelievable hearing some of the stories. He comes home over the year and a half he's been, it's just crazy here, these entitlement-minded people. And they come in, they talk to you like, you're less than human. That $500, if you could make that one day per week, you've replaced the whole need to go to that place. And you're not even pushing it hard. You're not even pushing it hard. You're not pushing hard to break the account. You're not pushing hard to feel like you got to keep up with some level of measurement. Somebody on the internet's doing this much, I got to do that. You don't have to look at my videos when I'm trading all those contracts and building up a large position. You ain't got to do $12,000. You ain't got to do $16,000 and $20,000, $30,000 days. You don't need to do those. You can get to those, but you have to grow into making $200 and saying, okay, $200. That's your whole week and half right there with one transaction. That's how I got hooked on this. In the 90s, I got hooked on that because my pay was less than $300 a week. Bring home. And I was thinking to myself, man, if I could just do one bond trade per week and just get half of a point, if I could just get lucky enough to find 16 ticks on one contract in the bond market, that's $500. That's better than going to work. And once I do it, I don't have to do it again because I'm scared to trade, right? Well, that was my whole approach going in, easing into it. And I sat down with him, I explained this whole thing to him today. I said, I was afraid to get into it when I was in the 90s. I mean, it was exciting, but still scary. Like, I don't ride roller coasters. I think they're thrilling to watch other people go nuts and throw their guts up and scream and, probably blow out an intestine and guttural, screams as they go down the deepest part of the decline. But I would never get on those things. I don't like them. I have to be in control. I have to be in control of me, the environment that I'm in, and that is not something I would do. And I don't want to treat my trading like that. So I have to be very methodical about what it is I'm looking for. And the way I teach you as my students, I teach that same approach. We're not gambling. We're not inviting happenstance. Okay, so I told him, I said, you're going to trade until you get fatigued. And then as soon as you are like, you just don't know why you're doing it, you just push the button to find out, okay, what happens. That moment, that's what I was waiting for. And I explained to him, I said, that's where everybody blows it. Everybody blows it. At that moment, it's because you have either hurt your account, someone has hurt your feelings or made you angry, or you're sick, or something cost you money that was unexpected. You are using that moment to replace some kind of negative thing that you're going through. Or maybe not even experiencing it yet, but you're afraid of it. You're afraid if something happens, it's looming in the offing. What happens if my girlfriend? What happens if my wife? What happens if my husband leaves me? Well, I won't feel so bad if I can make $1,000 today. When really you'll still hurt because you have emotional commitment to that. Whatever that thing might be. It might not even be a relationship. It might be some kind of a, I don't even know. It could be a number of things. But a what-if thinking scenario of something negative, something harmful that may happen to you could be a very triggering thing for you to get into a trade that has no real sound reason to be in it. And you're looking at it with the expectation, if it pays out, this is a better use of my time than sitting around worrying about something that may or may not even happen. And I have done that. And I have blown accounts in a 20-year-old mindset. I was fearful of a lot of things that never fucking happened. I had so many unrealistic fears. What if this happens? What if that happens? What if this happens? And none of it ever happened. It never happened. But they were so overwhelming to me at the time that it forced me to take on trades and take on risk, hoping that if I got paid out correctly on the other side of that trade, at least it was better than me sitting there twiddling my thumbs in fear of what may not or may come. The uncertainty of what if thinking is paralyzing. But when it's not paralyzing, it's the instigation to take you into a gambling environment. Think about it. I promise you, if you do some serious soul searching, you could go back to those times where you blew your accounts, where you've done serious damage and drawdown in your accounts. You've probably many times been in that same circumstance and not even realized it. And the only way I identified it is because I was journaling it. And these same circumstances kept coming up when I blew the account. These things were there.
This is my hack for working smart. Money.com.
The way you ask, what's this? As if you don't see anything. But yeah, I'm tape reading. Silver and Nasdaq this London session. I'm watching to see if we get opportunities. Of course, if you've watched the video that I just uploaded this morning, you would know what I'm looking for on silver, and you know what I'm looking for on silver and NAS for the day and for the session. So yeah, but right now I'm looking to see if silver can trade down into discount of the day, which is below midnight, right? Below midnight and 2 a.m. opening right there. So I want to see if we can get this discount, this blue line. That's what I'm looking for right now before anything else. What do you see today? What are you looking at for the day? I'm curious to know what you guys are up to on your side. Very curious to know. I think there was supposed to be a JPY speech of some sort, something like that. What happened to that? Is that still happening? It's one of those ones where they don't really say what time it's going to be. They just say it'll be there. And yeah, I don't know if that's already happened or not, because we're now very well into London. Oh, I see, it already happened at midnight. Surprisingly, it literally happened at midnight. The reason I'm asking is because I see a possible continuation to the upside. So if it happened at midnight, this was midnight here, it didn't do much. It did something, it spiked down, but that was it. Where is it? Yeah, right there. Pushed up and now dropping. But I'm still looking for a continuation to that all-time high on GJ. Right now, of course, we have these two inefficiencies respecting each other on the 4 hour. But right now I'm looking at this guy. This massive imbalance here. It's a critical component on whether price is going to continue higher or not, because so far from what I'm seeing, it seems like the bodies of these candles are all inside of it. So looking to see if this pushes us higher. The first target will be these relative equal highs right there, basically that buy side liquidity, and then the all-time high after that. But let's see. Very interested to see how GJ closes this week. I would have liked to see it close above this bearish candle over there. I think we talked about this on AJ, if I'm not mistaken. I would like to see it close above this, but with the way it's been consolidating this week, I don't know if that's even a possibility. So we'll see next week. And oh, you also mentioned GJ buys. You're also looking at GBP NZD buys. Damn. Okay, GJ completely disrespected the SMT. Why would I would not be buying this, to be honest with you. I mean, I know we're coming from that higher time frame PDRA. I think it was the weekly. I know we're coming from this, like, yeah, sure, from the discount PDRA there, and we went down to the 4 hour for confirmation entries. Then I saw this imbalance right here, and I also mentioned I don't like the fact that these lows were kept like that before we made this imbalance, but it's fine. We could see price not even fill it because of that SMT we had with Euro NZD. So I thought we would just continue higher from this inefficiency up here in premium, but we didn't. We came back all the way down, and now what are we doing? Creating this so-called support area. I don't like that. I don't like this. I wouldn't be taking it just because of these lows. That's literally it. Just because of those lows, I don't like it. 9 hour. Look at that. 100% fill with a low that, no, I don't like it. This looks like it could easily take out these lows. The sell side. It's better when we just take a sell side liquidity, like, you know, once, like a quick sweep. Like, it would have been nicer if we saw this, you know, drop down. Then, yeah, then we're here. Obviously, then I can buy it. This would be nicer to see, but then to come and make even more lows, more liquidity like that, equal lows there. No, not a fan of those equal lows. Of course, the market can leave those equal lows for maybe next 2 months or something. Like, of course, that's a possibility. We can just leave it and keep going higher, as you said, from this inefficiency, for example, the 4-hour BC. We can just leave it and keep pushing higher for now. Then in the future, come back for those equal lows as a target when we are selling. So yeah, that's cool. That's cool. But I do like GJ. I like the GJ idea, but I just thought the news at midnight would have just propelled us higher. But let's watch and see. I told you I'm watching this inverted gap, right? And we also have a 4-hour BC there within it. So let's see how this BC cooperates throughout the day. I mean, let's see how much it cooperates, if at all, throughout the day. It'll be nice to see an expansion on all the GBP pairs. Do we have any news today? I know we have stuff in New York, but anything else? All right, let's pull up what we have. So this is our news for the day. So everything we have, I can already see, is during the New York session. Nothing is here in London. At 8 a.m. we have a member of the Feds. You're in already. You're in on GN or GJ? Which one are you in? But yeah, anyway. So a member of the Feds will be having a speech at 8 a.m. Not even 8:30. So that's interesting. And then CAD, we have core retail sales. So for those trading CAD pairs, this will be interesting. And I think AUD CAD actually is the best pair to trade here. We'll go to it in a moment. But I think AUD CAD will be a nice buy from this. Then we got Powell. I didn't know this guy was talking today. But yeah, he's talking today at 10 during the Silver Bullet hour. At 10 a.m. And then finally GBP. We have a speech at 11 as London closes. That's cool. I didn't know this guy would be there. Oh, then we have this. Day 2 of the Jackson Hole what. This one, I don't think we had a time set yet because isn't it 5 days long or something? I forgot what it was, but we went through this last year also. And I remember being so curious to know how it works, but I wasn't too interested. Being in on both, that's nice. I will be supporting more of GJ than GN. I'll be supporting GN than GJ. I mean, yeah, GJ than GN. And I'm here busy highlighting a 9-hour fair value gap. I thought it was the 4-hour chart that I was on. Silly me, silly me. This is the 4-hour one, not whatever it was I was doing just now. Alright, I guess the first thing you would like to see since you're in the trade is for us to trade above this and close above it. So let's set an alert for closure, and then here we go. We will see after the news at London close, which is basically lunchtime, New York session. Oh yeah, I said I was gonna cover a AUD CAD and why I think it's a good trade to take today. When you look at the daily chart, you can obviously see that price action has been bullish. You can also see that we have been respecting bullish PDRAs very nicely. We're in a buy trend now, a bullish trend, back up to that buy side liquidity. Of course, this came from a higher time frame. I didn't just pull it out of myself or something. I'm looking at the monthly time frame. On the monthly, you can see we respected this fair value gap that's aligned with that order block right there. I don't know what's wrong with my mouse. It's been weird sometimes. I need to get a new mouse. But yeah, so I'm trading this internal to external range liquidity. Because I'm working with a monthly PDRA, I look for confirmation on the daily. Right, on the daily, we obviously got our confirmation. We had a market structure shift. We're respecting bullish PDRAs. Bearish candles are pushing price higher. If price actually manages to somehow trade here, this is a no-brainer area to buy, because that's a proportion block. It's an order block that's other block is created, another one is created respecting a previous order block. When we have two other blocks like this respecting each other, this one is now known as a proportion block, and when price taps a proportion block, it goes immediately. It doesn't even waste time. So if price doesn't respect your proportion block, just know that it's probably changing directions again to the downside. So yeah, I'm watching this proportion block to see if it takes us higher, but it doesn't even have to get there, especially now that we have news. We actually have news. Let's actually measure the range from the discount to premium. Yeah, see, it could get there, but it doesn't have to. If it does get there, that's a better discount, because when we measure the range, this is the only discounted PDRA that we see here, this fair value gap aligned with the proportion block. So this is a very sensitive area in price, very sensitive area to look for buys. So within this area, if price taps it, let's say the news comes out and it pushes it lower, within this area you could look for an hourly shift to look for buys, especially if CAD news can be very aggressive that we actually tap the proportion block. I would personally just be buying the proportion block blindly. I wouldn't wait for a confirmation or anything. I'll just take the proportion block as it is and then look for an hourly shift to pyramid on my trade, taking into that buy side liquidity up there. So yeah, that's my 2 cents, my opinion. So yeah, this is a very nice trade for today. We'll see how CAD plays out. CAD can also we can just decide to push up from here. You could find that maybe a NZD CAD has already tapped into that discounted PDRA, so you could find that that's the SMT that we needed. Okay, it hasn't, but yeah, if it did that already, then I would say that's enough of an SMT for us to take it higher. So because we haven't, that's even better, that's even better, because it gives more sort of assurance that we are likely going to trade into that discounted area, this area, sensitive area for price. Look for an hourly shift inside here to buy up. So yeah, that's the economic calendar. That's what I have. And you said you're in on GJ and GN. Cool. I'm also supporting bullish price action. Let's see how that plays out in the next few. I didn't even notice even the daily. Even the daily is being supported. That's cool. So yeah, let's see if today the GBP news can take us finally out of this range, because literally this is the whole week. This was Monday, Tuesday, Wednesday, Thursday, Friday. We just stayed in here. We're basically where we opened up this week. So yeah, let's see if we'll come out of this range. If not, then who knows? Probably next week, Sunday, we just open up and just keep grinding higher. We'll never even retrace. That's also a possibility, so I'm curious to see. Oh yeah, look at that. On the side, silver actually came down to the midnight price and rejected. That is nasty. The rejection is so quick. I thought we were going to trade deeper. I still think we are, but that rejection off of the midnight price is nasty. Honestly, that is insane. We didn't even get to the 1 hour gap. We didn't even get to the 1 hour gap. This is the 1 hour time frame. This is the entry that I'm looking for. I'm looking for price to touch these bodies right here, which is inside of the gap. So yeah, but right now this rejection, insane precision in price action. Look at that. On the 1 minute, tapped it, pushed up. Of course, I would still like to see it drop more. I want to see it drop into that, not drop too much, just drop into this area. But this reaction here is not making me too excited right now. I am not too excited right now. See, that's the midnight price. That's Asia session. I wasn't up this Asia session on the chart. I was awake but not on the chart. So I didn't manage to catch this area because I would have caught it somewhere here or here. But I didn't, so I have to pay the price and wait. Patience. Let's go back to the 15th. Preparing for sales on gold. From what level are you looking to sell from? I mean, gold, of course. What level are you looking to sell gold from? What do you mean right now? If you mean right now, could you give me your logic, maybe? There's this setup I was looking at the other night and I got stopped out. This was actually my only trade yesterday in the futures account. I wanted to post it, then I forgot to post it on the group. But yeah, I got stopped out on this one yesterday. I was looking to target these relative equal highs after coming back down into this fair value gap, order block, breakout mitigation block, everything. I actually wanted, I bought there, looking to aim for those equal highs, but yeah, of course price came and continued rallying. I mean, continued dropping. So yeah, that was unfortunate, but it is what it is. It's the risk involved. So yeah, where do you want to sell from and why? 1 hour bearish order block. 1 hour. A high probability order block is one that swept liquidity. Right now, on the hourly perspective, I don't see a high probability order block. So I'm guessing the previous up close candle is the one you're referring to. I wouldn't refer to this as a high probability order block at all, but I'm guessing this is the one you're talking about. Because yeah, I won't consider high probability just because we didn't sweep any liquidity whatsoever at the highs. Of course, we didn't take this high, we didn't take any highs, no highs took each other. All this to me is a low resistant liquidity run. All these highs here, literally all low resistant because they're all failure swings. I don't like what silver is doing with me right now. Better give me this entry today. Like, it better. I am imposing my will on the market. So yeah, are you talking about that other block? That up close candle? We're talking about something else. Okay, wow, I apologize for that noise. I didn't know my phone was not muted, silenced. Look at that, beautiful reaction, enough to make a new high off the midnight price. I should have probably put a small position there, then look to pyramid if we traded below midnight. One more time. I still think we will trade below midnight though. I still think that if we take a high, I would consider that as a double push. Double push. Take a low, take a high, then run quickly to the sell side. Let's see. This guy. It's still early morning and you're talking about passing out. Relax. There's no need to be on the edge, you know. It's yeah. Just be mellow. Mellow.
performance that you've never even dreamed of. Because when you excel in knowing where your threshold is and you say, okay, I'm content with that. That's why I always said, be content with enough. What is enough? It's going to be uniquely different for all of you. $15,000 winning trade may not be significant for some of you. For other people, that's a whole year and I'm done. I ain't got to do shit now. So it's a matter of personal preference and where you are, what your expectations, what your skill set provides for. But your mental capital, the way you build that up, is when you have the victory like this and it's done well, and you may have never taken a trade on this. But remember, in your journaling, you're going to be recording it like you saw it coming and you did. You're tricking your brain with pseudo experience. So you're always constantly laying down foundation psychologically, because this is where all this battle's won. It's not in the chart, it's in your head. Because you can talk yourself out of a winning trade easily, and you can talk yourself out of a short-term drawdown that will eventually pay out if you just stuck to the model and what you're trying to trade. But your mental capital needs to be increased. How do you increase your mental capital? Because you can't deposit mental money. It's experience. That experience factor is something that goes largely untouched in terms of teaching. Mark Douglas didn't talk about it enough. He didn't really get to the grasp of, you have to fortify yourself between trades. When you've done something correctly, sit still. Feel what it feels like to be content, not needing to go to that next trade. How do you know you're ready to go in and trade with live funds? How do you know when you're ready to do a funded account challenge? When you're not driven by the passion to get into a next new trade. If you're the person or persons that always tweet to me when I'm calling something out and it delivers, you're the first person in the line that says, what's next? What's going to do next? You're not ready, bro. You are fucking not ready. You're a fiend. You're literally cracked out. You're equivalent to having a crack pipe in your fucking mouth, and you're literally out of rocks, and you want to get the next one. You're fiending. You're not ready. You are absolutely not ready. The people that are like, yeah, I'm going to take this week off. What the market's going to do is, yeah, it's all right. That's someone that's got the right mindset. If they're already consistent in terms of what they can see and forecast and price action, and they can take themselves away from the market, even when they know there's something coming. That's maturity. That is a skill set that if you can forge that before you press into real money, that factor of, well, discipline, it will serve you so well. But you all think it's just the stuff in the charts that's what you need. The new ICT gimmick, the new something setup or model, whatever. And it's not. I've given you shit. I've given you so many things already. But you are the missing final piece of the puzzle. And you don't want to believe me because it's painful. I'm going to constantly remind you. Every time I talk on the Twitter space, I'm reminding you, sometimes gently. But in this one, it probably hurts a little bit. It probably feels off-putting. Don't hate the messenger, okay? I'm Dr. ICT, okay? I'm telling you, this is the medicine that you need. It doesn't taste good, but it helps you. It makes you better. And it's important for you to grow and understand how to do this correctly and not hurt yourself. That's why I teach in a demo. Because if I teach in a demo and I go out there and I show you what I'm doing, because the misnomer is this. If I'm the number one guru on Twitter, right, Patrick? And I'm trading with a demo, I don't trade with live money, I'm already loaded. I don't need to prove people I have made money in the marketplace. I don't need to do that. I'm calling it. My students are making money. The stuff happens. That's all that needs to be known. That's the only thing I promised, that you're going to learn how to read price action. I did not promise you profitability. That's something that you individually control. But if I'm out here in public, in the mode of an educator, and I have no emotional commitment that holds me back about using a demo, then you should have no problem practicing in one. If your mentor is operating and teaching through the medium of a demo, I don't listen to these jokers out there that have something to sell. Oh, wow, he does this and he does that. And they're not even doing anything close to what we do. Their whole month, I could do that in one fucking day. One day. From beginning to end, show you the whole fucking history. Done. I don't need to do that. I don't have a little dick complex, okay? I'm completely content with who I am, how I am, and my own length. I don't need to worry about anything else. So when you're looking at this, don't view what you're doing as a demo is not significant enough, because it is significant, because you're reading price. The same price action that's unfolding in that demo is happening for people that are trading on real money. The real money people that did everything opposite to what you were doing are expecting in price action and lost their ass. Believe me, they know for fucking certain that shit just happened to them. I'm teaching you so that way you have no emotional connection to this. You have no connection to it emotionally. So you can't be swayed in the periods where it will do its damage. You can't get all, egotistical, because you're not making any money. You're not getting taxed. You can't go out and spend those demo dollars, but you're getting that experience. And you're allowing yourself to learn what I'm teaching you. When you get it right, pause. Feel what it feels like to get it right. Give your journal time between entries where you executed and your next trade. I'm not convincing you or trying to talk to you into taking trade after trade after trade after trade to fill your journal up. That's not what this is all about. It's quality over quantity. And just because I'm teaching you the skill set through the medium of day trading, it's not everyday trading. There's recklessness out there, and people gravitate to wild cowboy type shit. And I've done that stuff, and I fell victim to it when I was coming up. I saw people doing some crazy stuff on America Online. I was like, well, I want to do that too. And I got hurt. And I tried to force myself to learn what it is they're doing, and I couldn't do it. So I just stopped. If I'm not able to bridge the gap for you, I'm not the best mentor, okay? I've said this many times before. I'm not the best mentor. I'm sure in years to come, someone's going to properly learn what I'm teaching, and they're going to do a better job of coaching other people, okay? But until I'm done, that can't happen. But November, we're done. I may not be able to fulfill that need. That one of you, or individually some of you that are listening, I might not be the person that can deliver it. It might be one of my children later in life if they decide to go that route. I don't know. I'm doing the best I can. I have limitations as a person. I have things I wrestle with, and I'm a real person. So I'm practical. I know that I'm not going to reach all of you, and it hurts me because I try very hard, very, very hard to try to do whatever I can to allow you to understand what it is that you need to know and to eliminate the things you're worrying about. And it frustrates me when I see people not listening to the sound advice that I wish I would have paid whatever I had to learn how I'm teaching you. Like, I'm trying to be, because I know what it was like. I lived it. I mean, I know 20-year-old Michael. I mean, I'm that guy. And if I would have had this, it would have done so much for me. It would have encouraged me when I needed it. It would have kept me aligned properly, and it would have allowed me to control myself when I didn't have any control. When I would win, I'd want to go back in right away. When I lost, I'd want to go right back in. Like, I was not fearful. Once I learned certain methods of getting in, I was looking for it all the time, not understanding that the market's going to have an ebb and flow. There's a time delivery to all this shit. And unless you understand that, just the liquidity alone is not enough. It's essential, but it's not enough. You have to know how they use time. And that takes time to teach, which is why I tell everyone, a minimum is a year. And that's just really scratching the surface. Your best learning is going to be in your year 2 through 4. But you can be profitable all through that. So don't let that be a deterrent. Don't let it be like, you're saying I can't make money. No, you can fucking make money just watching the YouTube playlist from 2022. If you have a general foundation of understanding what price action usually does, if you're familiar with trading and you go into that model, you can go right out the gate, boom, and start finding profitability. I'm convinced of that. But the problem is I have a lot of people that come to me that are greenhorns. They're brand new. They're just right out of the womb. Here, make me a trader. I don't know how to walk yet, but make me a trader.
AUD USD. I mean, the fact that it's a USD pair already, I should mention that I'm bearish on the dollar, even though those sells look enticing. I don't like that. I really don't like that silver came here, tapped the midnight price and left without me. This is paining me. This right now. This I don't like it. I don't like it. Anyway, AUD USD. AUD USD high time frame is more critical than the lower time frame. I'm looking at the high time frame. We just came from sweeping liquidity and aggressively ran away from that low, right? So this is what it looks like on the monthly. On the monthly chart, this month just came and swept this. It looks like already by looking at this expansion, this reaction, that this previous monthly high is very likely, right? On the weekly perspective, we can see that we don't even care about this massive imbalance. We're not even going to try and respect it. Right here, we've already closed it up. We've even traded to this other block. Which other PDRA is left? Well, rejection block and buy side liquidity. So I'm very bullish on this, and I'm very bearish on the dollar, just because of that. We already traded to the yearly opening, and now what's next beyond the yearly opening? The sell side liquidity, right? When we go down to the 4-hour chart, yesterday I was looking to see if this 4-hour CB could take us down to the sell side liquidity. It didn't. We closed above it. But now I'm looking. If you notice, I set I did set an alert there. I want to see if this can also close below that same CB, because if it does that, then we could look for something like that. Okay, don't mind that my line is jagged there, but yeah, we could find something like this, because if we are bullish, then we should be reacting from this area right now. And that's why I say I see the sells you're talking about is coming from this inefficiency. I'm assuming after a liquidity sweep up there, right at the highs, displacement, market structure shift, everything looking nice for sells. But my argument against this is, if we are bearish, we shouldn't even have to retrace this much into the inefficiency. We should even remain at the lower portion, or at least the bodies should remain at the lower portion of this inefficiency to continue lower. But yeah, recently I've just been trying to read market psychology than like what's the sentiment on the market actually saying right now. Everyone wants to sell this because of the displacement they're seeing. Same thing that I pointed out. If you watched my video before this live stream, I actually made a video on my outlook for Nasdaq and Silver. But if you watch my video, you would know that on the indices, right, on Nasdaq, every time the market went down, everyone wanted to rush in to sell. And I don't think there's anything different with here. Right now, with this massive imbalance and this closure, many people are selling, many people are waiting for retracements to a discount to sell. And I'm looking to see if the markets can just disrespect that nonsense that people are thinking, and basically respect the higher time frame PDRA, which is this breaker, and push to the buy side liquidity right there. See, so yeah, I'm using that higher time frame narrative with what market sentiment probably has in mind right now to determine my direction. So I'm not against this CB working out on the on AUD USD. Really not against it. I don't know the market. I don't know the future. I don't know anything. Anything is literally possible. But if you asked me, as if I was someone trading from the daily chart, I would say, well, on a bullish trend, on a bullish market, every time we had a down day, look to buy the next day. Okay, I forgot again to mute my phone, and that was incredibly loud. I'm sorry for that. Every time we had a down day, look for price to push up. And here we had 2 down days yesterday. I mean the last 2 days. So I'm expecting today to be an expansion higher. Disrespecting everything people are thinking. It's time to sell, it's time to sell, and just push up to the buy side liquidity. We might not clear the buy side today, but we might clear this buy side. We might make a new high of week today. Might. All this is just likelihoods and possibilities and stuff. Nothing set to stone. So please do not take my word for something. Don't take my word as something to stand by. So yeah, I'm working with this item frame PDRAs and saying that I think I would be buying this than selling it. I was actually looking for an hourly fair value gap, and I think we already got that, and I missed it. Yeah, I think we already got the retracement we needed. I was looking to first see if we're going to be able to trade to this other block or create an inefficiency. But now, looking at this new possible swing low forming, we might not even come back here. Or price may return here during New York, then push up. If price doesn't return here, then I'm looking at this one. The reason I'll be looking at this one is sort of a mini proportion block. We didn't really come off of this lower one, this lower order block, but I think this could hold just because there's an inverted gap there as well. So yeah, if you ask me for my opinion, this is my opinion, but I don't know anything, so yeah, don't hold it by me. Right there is the midnight price. I'm not gonna label it, but that's the midnight price. So if price does not respect this other block, it would make sense to respect this one because it's the only one on the hourly time frame that's below midnight. But this is AUD, which makes it an Asia pair as well, so it might not even need to trade below midnight. So yeah, if you're asking me, I'm bullish, but sells, I don't see sells. I don't see sells. This will be the only. Let's say, okay, let's just put it this way. Let's say I was someone looking to sell AUD USD, right? What would I be looking for? I'd be looking for a trade back into premium, and hopefully a fair value gap to sell it from there, from premium, right? So I'll measure my range from the last high to the last low, and I'll probably look for a sell right now. But if I was in this sell, if I got tagged in on this sell, I wouldn't be so happy with the fact that we barely closed above, barely closed inside of the gap here, inside of this 4-hour inefficiency. This would not be exciting me too much. And this long tail, now that we're forming tails that are long and you're looking for sells, like if I was in this sell, or let's say I got in blindly on the entry of the fair value gap. So if I got in here when we entered the fair value gap, my stop loss is there, I wouldn't be feeling too happy about this right now. The drawdown wouldn't be making me too comfortable. So I try to use that psychology, like I think, okay, if I was in a sell here or if I'm in a buy here, would I be happy with this? Of course it can still play out, but would I be happy where I am right now? If I wouldn't be happy here, then well, I'm probably on the wrong side of the market. Then I'll be looking for a way to get out. Like especially now, I would say wait for 1.5 hours for this candle to close. Look to see if we create a BC here. That's another thing that I wouldn't like to see. If I'm selling, I wouldn't like to be seeing bullish PDRAs getting created in my sell position. You know, you wouldn't like to see a bullish fair value gap being formed here while you're trying to sell, because that bullish gap could be used to push price higher. So yeah, just watch for those cues, if you want to call it that. Those cues. I'm still gonna leave my pending order here, by the way, guys. For those that are wondering if I'm waiting or not, I'm just gonna wait. I'm hoping that New York will take out London low, which is this reaction from the midnight price, and I'm hoping that New York will trade down into this other block. Other block breaker, fair value gap. It's literally a unicorn right here. This whole area is a unicorn. It will be a unicorn entry. So thing is that we don't have a crazy news. Well, we do have Jerome speaking at 10. We have Powell speaking at 10, so that could that could inject some sort of liquidity. I mean, yeah, that could inject liquidity. So I'm just gonna wait. If it runs without me and I miss it, it's cool. I'm not going to force it. So for now, just watch. I don't know if I answered your question on AUD USD sales. I don't know if you're in a sell already, and I don't know if you wanted me to give you a go ahead with the sales. But yeah, you can just sell. I just don't know the future, so I can't tell you which one would work. You know, personally, I'm not too excited about USD pairs right now. Well, they're clean right now, but it's in a very deep discount. As an index, it's in a very deep discount to be framing any positions. For me personally, at least. I'm not saying for everybody, I'm saying for me, it feels that way. So yeah, I'm not going to be tampering with all that stuff. Let's see. Still watching, patiently looking. There's no news this London session, so not much going on other charts. Mostly sitting and watching and waiting. So guess we'll continue to do that.
oasis that exists in the minds of traders when they first start doing this. They think that there is some way out there that they can always go in and get the biggest winning portion of the trade and always have the smallest, tiniest little bit of risk and be 98% profitable. No. You want someone to tell you? I will. No, don't do that. Don't think that. Don't believe that. When you're first starting, where your focus is, what you should be believing is the most important thing is understanding where's the draw on liquidity. And work with that. Accept the facts that when you get it wrong, okay, what didn't you see in the chart? Go into your charts and really break it down. What was there that you didn't notice? And encourage yourself to say, you know what? This was a good opportunity for me to learn this about that. Not get mad and cuss at yourself or say, I'm never going to get this, because that's failing. You're on the pathway to failure doing that. Nobody gets to the winner's circle being toxic and judgmental about themselves and not see the silver lining in what it is that they're trying to learn. You have to cheerlead yourself. You have to be your biggest cheerleader. And that happens with a journal. A journal never encapsulates. It never gives room for that. Now, you can observe what you did incorrect, but you have to turn that around and say, I did this incorrect during this trade and I didn't see this. I'm thankful that I had the opportunity to see what I didn't see then. Now I can use this as advantageous intel going forward. Do you see what I just did there? It's positive reinforcement about a shortcoming that you as a human being didn't have the capability and capacity to understand at the time. But you're not beating yourself up. You have to cheerlead yourself. You have to coddle yourself. Encourage yourself. All these things, these are positive self-talk. It's important because if you have anxiety or if you develop anxiety, and some of you will, if you start trading with real money, you will feel your first panic attack. It's a given. It's going to happen. You will feel it. And it will be scary. And that in itself is a learning experience. And I've had discussions about how to manage that too. But you can't avoid it. But when you know where the draw is and you get better at it and you work through those growing pains of not knowing how to do it right in the beginning, but learning to get better at it. And then you also learn how to manage risk. If you get good at manage risk and also knowing where the draw on liquidity is, guess what you have become? Think about it. What have you become? The highest probable outcome is you'll be a break-even trader. And that's a goal. When you first start, you want to get to that point because most people can't even maintain break-even. What does that mean, ICT? Like, what are you trying to get at here? In the beginning, everybody wants to go out there and start making money right away, but that doesn't work like that. Even with me training you, that's not going to happen. You're going to have periods of where you do well, and then one or two things happen, and you go into a tailspin, and either your skill set or your lack of control just goes into drawdown, and whatever you made, you give back, and you go right back to break even. You might dip below the initial equity start.
Morning. Welcome. I know it's a bit confusing. It's just that I play these sometimes in the background when there's nothing else happening or when I'm just waiting. Yeah, So, yeah, I just play some of these like snippets if you would. I have an entire playlist of them on my Spotify, so yeah. I have the whole thing, then obviously edited ones on YouTube and stuff. But yeah. Morning, welcome.
Starting balance of your demo, funded account, live account, whatever it is. But you just hang around that break-even starting point. You make a little bit of money and then you lose it. And then you lose a little bit going drawdown. You're not wrecking yourself. That's water. You're in the game still. You're learning that, oh yeah, I've had losing trades, but it didn't kill me. Yeah, I've had losing trades, but I was able to sleep at night still because I can still trade tomorrow. I have an account that I can still trade tomorrow. I can trade next week because I didn't blow the account. I didn't tear it up so bad that I don't have equity to trade now. You have to have that mindset about what you're doing, why you're doing it. But if you understand the draw on liquidity, where it's likely to go to next, and you do not impulsively take on large risk just for the sake that, well, my broker lets me. Really. The government lets us purchase cigarettes too, even though there's so many toxins in it, it's guaranteed that you're going to get lung cancer. Given enough time, it's not a matter of it will give you lung cancer. Just because it's made available to you doesn't mean it's something that's good for you. The car goes faster than the speed limits. All of them do. Just because the car will go 100 mile an hour, is it appropriate for you to drive 25 mile an hour zone, 100 mile an hour in front of a school? No. But your car says you could. Why can't I? Discretion, concern, sanity. And you have to have that in trading. You can't lose sight of recklessness and the invitation that you are going to be given many times in this market. So now how do you get to break even? I just taught you. Trade it with the smallest singular unit of trading, even in demo. And you do this every day, and you condition yourself every day, and you learn more. Each example, each time you journal, you're going to learn more about yourself. That's the thing that you want to discover. That's the most important thing. It's not about the tricks I'm teaching in price action. It's about you, because you're not going to spend the time learning properly until you correct those very deviant behaviors that you don't recognize right now, that's going to prevent you from being successful. You don't see where that curveball is coming right now. Nobody does. But at the end of the first growth learning curve, when you finally get to your profitable model and you know what you're doing, when you look back at that point where you know you have something that is consistently profitable and you know what you're looking for in the charts to find that, when you look back at that point, you will see what you have done to yourself that made it more difficult and longer than it needed to be. And you will have to take ownership of that. And I talk to you with this idea in mind because it's always us. It's always us. And nobody wants to be honest and tell you that shit, especially if they're selling mentorship courses, because it sounds like you're beating up your patrons, you're beating up your customers, and you want to make them be all hopped up and encouraged. Yeah, I have discussions with that too. But I look at you because I'm talking to my kids. I'm talking to you with the father role in mind. I want to see you do well. And I've fucked up a lot. And I've learned very, very expensive lessons that you can't get from these dollar mentorships, okay? These fucking guys out there that just started this. You're not going to learn anything from them. You're not. There's nothing wrong with appreciating their approach to trying to do it on their own. There's nothing wrong with that. And if they want to pay a subscription-based fee to observe them doing that, okay, call it that. But don't call it a mentorship, because you're not really teaching anything. You're discovering yourself still, and you're fleecing people